What's up? What's up? Welcome to Spark and Trade. What's going on, guys? Welcome to Spark and Trade. I wanted to take the time to kind of go over a strategy that I've been working on and sort of just give a better understanding of how to trade the supply and demand levels. I don't think that there's any easy way to trade them unless you kind of understand how the market reacts from these levels. And I think the market really just basically does three things. It's either going to V-shape away from the level, it's going to double top or double bottom and then activate from that level, or it's going to invalidate that level. So in other words, it's not going to work. Maybe not right now, but we tend to see something that I think is worth kind of like going through. So with that being said, let's get right to the charts and kind of see some price action that I think might help clear up or help you guys understand what I'm talking about. So what I want to do first is just start with the 1 hour. And what I'm going to do from now on is like really just have a clean chart as I trade. I think we started off, I actually started off just having a very clean chart, 2 moving averages and the supply and demand levels. I began to get even cleaner by eliminating all the moving averages and just literally just having supply and demand levels and looking at this moving average right here. So what you would have seen before was something like 50 moving averages, that one's off. So you would have seen something like this on the chart. And there are no moving averages other than this band here that you see, which we classify as the money zone. Now, the money zone is nothing crazy. It's an 8 EMA and a 13. And I believe when the market pulls into this zone, there's enough trend traders waiting to enter the trend at that level, right? So if the trend is green or bullish, the trend traders, buyers, are waiting to enter at that level. So there's like either buyers, whether it be bots, funds, banks, smart money, retail, I don't care. Whoever's a buyer, there seems to be a very, very attractive zone to enter when the trend is believed to be happening. So with that being said, I like to think of this as the money zone. That's where the money is waiting to send the market to the other side. Now, this money zone comes in many different shapes and forms. We're right now looking at the 1 hour, where I'm going to show you variations of how sometimes if you don't catch the 1 hour, you have to catch the 15-minute. If you don't catch the 15-minute, you have to catch the 5. If you don't catch the 5, I don't go down to the 2 because I don't want to get caught up in the noise of trading the 2, although it's very, very attractive, or the 1. But for those who are lucrative and beneficial in those time zones, trade on, trader. So with that being said, let's talk about why, initially whenever I go live, I say trading SPY, NQ, ES, QQQ supply and demand zone. And it's because I want you just to take a look. Oh, and I'm going to take away the buy and sell signals that I have here. I won't try to go too deep into explaining too much of the indicator, but I wanted today to just focus on just explaining how we trade the supply and demand zone. What kind of goes through my head when I'm thinking about entering these levels. All right, so first of all, just don't care about what I'm telling you at all. Just stare at the chart, look at it. And just by looking at the chart, you can see that the market reacts to these green lines and these red lines. And you can then say to yourself, well, how many times does it react at those lines? This is back testing data to determine how am I going to benefit from this opportunity that's showing that we're significantly moving away from these lines, okay? So with that being said, let's take it from the top. So we have an established, if it turns dark green or what you would consider purple at this, I mean, maybe that's how you're looking at it, this purple, it's because the market broke out of a red supply level. So it turns dark green, but this purple is there for another reason. Anywho, market breaks above that, comes back down, tests that demand zone, which was once a supply, so supply turned demand, and bounces off of it again. You're not catching this wick. It happens, this is a 1 hour wick. This thing happened fast. Not as fast as you think, but it happened. Like, you either have to take that level and put a risk at this zone and just kind of say, all right, well, that's a zone that they're defending. So what I do when I trade is if I don't catch that wick, that becomes my risk. And when I put that risk on, I want to go at least 1 to 2 R from that risk once I turn on this trade. And I can eyeball the second R, right? So this is 1 R. We reach that within that 1 hour. And this is about 2 R from that risk. I'll take that, turn this into a green zone, and now I'm in a trade that I can forget about until I hit that level. Now we're gonna play a game of how many times do we hit target, and this is back testing for me. So essentially we would have taken this NQ trade from an entry of 13,385, 69 points to 13,454, okay, before exiting. And all this moved 35 points, taking back, getting us down to 19, and then shooting up to 66, and then coming back down to 34, and then finally hitting target. I don't even want to care about it anymore. I want to put on that trade for the reasons that I'm listing here, and it's very simple, right? Like we have, oh, that's supply. Oh, now it's demand. Let's take an entry when we see a reason to take an entry. Now, I don't want to get too bogged down with perfection. Our job is to understand how the market reacts at these levels and how to put on a trade. And as we move away from that, I have no setups up here, right? Because if I'm only playing supply and demand, I have no setups up here. The market does give me a setup, and I'll show you how we can use multiple time frames to really see why the market rejected this level the way it did. Because when you see wicks on a 1 hour, there's usually volume that caused it, and the lines are, the supply and demand lines are being basically picked up by volume. So as the market comes down to this, if I wanted to only go long on a bullish market, in a bullish market, and this is about 512, 511, right? So last month, we are clearly in a bullish market since last year. Okay. Now, to some people, they might say, no, we're not. You know, it could be for different various reasons. But to me, we are in an uptrend, aka bullish market. Oh, okay, I see why. So this goes today. Okay. And how we play this bullish market is kind of up to us. Now these lines come in at every single, on every time frame. But we're in an uptrend when it was what, 512, 516 or something like that. So we're looking for 512? I think it was like 512. So yeah, this kind of move that's happening here, all right? Let's not get too caught up in it, but I just wanted to make sure you see that. And on some time frame, we're in an uptrend in a bullish market. All right, let's get back to it. So the market comes down and you only want to look for longs. It breaks that level with violence and doesn't give you a wick to snap back. If you did take this trade right here and that was your stop out, then that was your stop out. But you assumed that the wick was the trigger for your entry, and this time you were wrong. Okay, so it doesn't mean that anything is wrong with that. It just means that you took a shot in the condition at a level where you thought the market was going to do this. Okay, that's all that means. So it breaks through, establishes a new demand. So you start to say, all right, I got new demand on a 1 hour. There goes my risk. I need to go 2R from that. Here goes probably your 2R trade right there. So let's just kind of really do that. That's about 1R. So yeah, about 2R, right? So there goes your 2R trade right there. Market takes you, and I'm being very, very modest in terms of how we enter this 1 hour candle. But let's just say you entered right there. You're willing to lose 41 points and take about 80 points from the market, which is very different from the old risk, right? Like we were willing to lose about 31 points to make 69. So we're always trying to make at least 2 to 1, okay? In this case, market pays you very close to your target, 60 points, takes you back into the gulag to 5 points, and then slowly but surely grinds back up, eventually hitting target. Now these are hourly candles. Now this is over a course of 11 hours this trade took in order for it to work. This one over here, you got in at 10 by, let's just say 1 hour, you were, this is a 1 hour chart. Just make sure of that. Yeah, so about two hours you were done with this trade. Okay, this is when it was really 3 hours, but about 2 hours you were done with that trade, and this one took 11 hours. Now, but it worked, right? And it worked because of the reasons that we were thinking. Now, you could have said, oh no, this is supply now, and I'm probably gonna go with the supply, but essentially we broke through that, so this is probably demand again. You can say to yourself, I wanna take a long here, risking this level, and this being your kill box. You just want, the point I'm trying to make here is that you want to get as close to this level that you believe is going to be demand or act as demand or supply as possible, because once we move away, that risk becomes a lot bigger to you. So if you took this level here, that's more than a 2 to 1, and in this case, from here to here is about 1, from there to there is about, so your 2 to 1 is really somewhere here on that risk reward. We'll measure it out for, so about 25 points to make 46. So 50 points would be right here. So this candle here takes you to 50 points. More like 70 points there, but this takes you to 50 points around right there. That's not right. So yeah, that's 62 points to the high, right? So we've definitely cleared the target range that we wanted based off of this setup. If you haven't seen from the last couple of like setups, this isn't rocket science. It's just straight up supply and demand trading. Market pushes up, you hit target, market slams back down. Market hits that level again. Oh boy, there's another opportunity. Let me go in. So you say, all right, well, let me try this one. You go in somewhere around there during that push. Generally, I like to keep that candle as my risk tolerance. So if we did that, we're basically going in from there. This is about 1. Keep it fair. Oh, you know what? None of that matters. I think just making sure that I measure it is what matters, because then I can always adjust the green. But if you entered somewhere in this candle, in this kill box, and you can draw this out ahead of time as the market's moving down there, you're willing to lose 33 points, 32 points. So we're making about 64 on the other side. Here goes 57. So 70 something up here. We're definitely clearing target on this trade. Move it up a little bit more. And there goes another target hit. Now you can go crazy and push that target up. I don't care. That's not 2 to 1. That's your job, right? As a trader, I think that's our job, and we would continue to just do this over and over, and just have to be patient for the setup, and kind of just know how to and when to take it. Now the market pushes way above your target. Maybe you have a runner that survives this condition here, because we are in a bullish trend. This green cloud is your money zone, right? Support came, support is coming, boom, snap out. Oh man, support is failing, boom, bottom of the Bollinger Band catches you. And then the market rallies back to the upside. So if you enter down here and you were like, man, I'm not leaving until they hit the bottom of the Bollinger Band, you just keep moving your stop up. This saves you, you just keep moving your stop up. This saves you, you just keep moving your stop up. That's another complex strategy that we can talk about as to how to create stop losses. And now you're basically swinging. This trade would be on for a while, but you're totally ignoring your supply levels. So this is not really supply and demand trading anymore, right? You're like swinging from a demand entry in an uptrend until they violate the Bollinger Band. That's the theory of that strategy. I'm swinging this move until they violate the bottom of the Bollinger Band. And you can clearly see how we violate the top of the Bollinger Band. We push above it. Anytime you get this leg here, this red line there, that is when the price is exiting the top of the Bollinger Band, and the I have some moving averages that are hidden until X happens, and in this case, that X being that band is now pushing, or price is pushing above the in this case, price is pushing above the top of the Bollinger Band. So here's the top, here's the bottom, here's the top of the Keltner channel, here's the bottom of the Keltner channel. And to explain a little bit about what you see here when this thing turns green, this light green at the bottom, but not the top, just at the bottom, the price has gotten extremely oversold. So that's my version of an oversold indicator on the chart. I don't have RSI, I don't have any of that stuff on the chart other than it showing me that. And there's a whole nother logic behind that. But I also have an RSI up here on the label that you can probably we'll probably do a whole nother video on that. There's another strategy that I play with. But yeah, so this is just your supply and demand strategy, and what you can do with a combination of knowing what these indicators kind of are and leaving the chart as clean as possible is, oh, we're reaching oversold levels and we have a new fresh demand line. I'm absolutely taking that trade. Mark Douglas, which is one of the guys that I credit with helping me with my psychology to make sure I take the trade from risk to exit, to target. I don't know whether the trade is going to work or not, but I have to take every single trade and let the theory of probability work out for me. So in this case, it does. In that case, it does. So far, if I even add on this trade that you thought was going to work here, so far we got 1, 2, 3, 4, 5 trades. We lost 1. Okay, I like those odds. If I'm hitting 2 to 1 and I'm basically losing this 1R, I'm taking that trade every single time. The job is being up at like 10 in the morning to get that. Before this is Sunday, so you're not really catching that. This is probably Saturday, Sunday, and this is actually trading hours here. So in reality, we're just taking 1, maybe 2, maybe. But this is futures, so you can take these trades. All right, let's keep it moving. Let's keep it moving because I actually really just want to kind of beat the drum, beat the dead horse here. So here goes another setup back to the downside. If we wanted to just risk anything within this grid, I'm being again very, very modest as to how you enter these trades. These are 1 hour candles. You have a lot of time to just take a position. You just have to be willing to risk what the risk is from that level. And in this case, it becomes 32 points to make about 69. Done deal. We're going to go ahead and turn that into a bearish trade. Our 6th trade ends up being a winner chicken dinner, right? So there goes your winning short trade. Is it a winning short trade? So if I were to say we're going 32 points, 64 points, 62, 66, 64. So if you held this trade and did not take profit as we approached 53. So this is about 1 point something R, right? Like we didn't hit the 2R. Win, lose, or draw, I'm not taking it out. This becomes a losing trade on this breakout. So if you're in this trade and you don't average in a pair, or if you do average in a pair and then you get that move down and you give up, so it gave you 1 shot, pull back, 2 shot, pull back, 3 shot. And again, we know where the threats are in a trend trade. In an uptrend, the bottom of your Bollinger Band is not your friend, and the green band is not your friend. So I'm not telling you to take money out of the market and not let the trade play out, but we know we're clearly in an uptrend, so that trade is a risky trade in an uptrend. Doesn't mean that you can't hold it, because reversals happen and the market's going to show you that at some point. But in this case, trade number 6 lost, 5, 6, so we're about 2 for 4 at this point. Another supply move comes in right here, so let's draw it out. This is clearly a loser. We don't even go 1R, but there goes. Sorry about that. It was another losing trade. All right, and I mean, I guess by now you guys can see, if I don't take that trade, right, and it stops me out, I can take the breakout trade, which I don't take, but you know that this supply could turn demand, so we could flip it and then basically take the opposite end of that by putting an entry here, somewhere around the breakout, I would risk the breakout candle, because if this thing turns back on you, you're gonna get beat up. So the breakout candle, somewhere here. This is a 1 hour, so I'm being very modest with our entry target. Like always risking like about 30, I believe. Yeah, so that's about 44 points. Let's go 80. 80 points is somewhere right there, right? A little bit above that. We hit 80 points on this move, so that's a winning trade. So this is a winning trade. After getting hit by that one, you take this breakout. You took this short because you started seeing supply form in up there, and this clearly doesn't even really pay you out much. Money zone taps you, and that one takes you out almost. This goes down, that takes you out. And immediately if you flip sides again, because you believe that this is an uptrend and supply then turn demand on you, on that breakout somewhere around there, your risk has to now expand because you're taking a breakout trade. It's the most craziest thing in the world to me, but it works, because you're taking it from a level. That is probably not the real risk tolerance, so let's get serious with it. Somewhere right here is your entry. Your risk is 50 points, 57 points, so we're going for 114. Yeah, I was looking for that. So somewhere around there, it was a breakout, so somewhere around there. Let's just move it up. Let's go up there. Clearly, this is going to hit target, right? So 57, 187 points is where this thing goes. Even if you went to 114, you hit target. So far, we've seen how we can flip what was a supply that then turns into demand in a bullish trend and go with the trend. Doesn't mean to not take the short trade. We're going to take that short trade. All right? Because we don't know what the market's going to do. And that theory of probability is our bank. We finally decide to take this trade, being a little bit afraid from all these breakouts in an uptrend. And then this bad boy pays you your 2, 2, 1. Okay? You can even extend it a little bit more after you start to get the break and fail of here. They never retested your area of concern, your kill box, which is this area of entry right there. And the market then goes, were you risking, let's say 45 points, and you made 102 points. And you have a demand zone down there. So now let's play a game of ping pong. some point you decide, all right, I'm going to enter this move right here. And, you know, they say give it a little bit of space from that demand, but let's just say you got stopped out. That's a failed trade. Okay, and stop out because again, we don't know whether demand or supply is going to be X, Y, and Z, but you gave it a little bit of room. They ended up going out on some more, really tight one, wicked your ass. Doesn't that hurt? It happens to all of us. It happens to the best of us. We have our rules. We know why we do it. Statistically, we will kill this market if we continue to follow this rule. We go in again after getting wicked out because we see the market immediately buys that up, and we're going to go ahead and shoot for the stars on this one, but we know supply is right up there. I don't have to do the measurement, but just to keep things pretty much simple, we're risking now about 43 points. We made 120 something by trying to target the highs, and we're gonna reverse and do the opposite up there, okay? So this is a fail, that's a win, this is a win, that's a fail, this is a win, that's a fail, right? So hard. We'll count this up later on to show you how statistically we're just this is, I would qualify that as a reason to enter this market when the bounce starts to happen. We did it before where I think we failed, but we're doing it again because it's close enough to it. I wanted this demand level down there. It's not leaving without me. There goes your 2-to-1 kind of risk there. Let's just keep it honest. Booyah. Risking about 38 points to make 100. Right? You made it. You made it up there. Let's just say you took this short, risking that high. If they get up there and you don't want no parts of that breakout, let me get a red one over here. You end up taking that supply line, red line up here, right? And it got close enough to it, and you're like, yo, you're not leaving without me. I want to get in before you kind of leave this wick, or let's bring it down a little bit more, right? I'll be fair. Because the reality is that these things happen so fast that I want you to see that. 33 points, so we're going for 66. So far we're at 70 something. In that same candle, the market dropped 65 points. You hit target, so that's a win. All right, and I'm just being fair. 2-to-1 is a win. 66 in that same candle that's like 65 right now. No, I think it was more than 65. We'll do it again. Enter somewhere here. Oh, 36 points. 72 is where it taps out. I would consider this a win. You can argue with me, I'll take that. Down here, we're not really going long because it's not really, close enough, but there is a demand level here. Again, we're going to talk about the multi-time frame. We hit up here again, right here, wicks. Let's go in before this market gets away from us. We decide to take this short. I'm pretty sure I can extend this to the bottom if we wanted to go from zone to zone, but we know that this is definitely in more than 2R. Right? So this is about 39 points to make 120 points. This market pays you no stress, just straight grind to the downside, breaks through that, keeps on going, etc., etc. You have a failed play here if you decide to take these longs. The risk reward might be, debatable, probably be somewhere like, say this is 1, that's about 2. So, I mean, it's debatable, but that's a fail move. Now, we do know that the red band in a downward trend, right? Once it flips red, you have to kind of decide, oh boy, are the bears going to kick my ass on this reversal trade? When it's green and you're taking demand, it's no problem. But when it's red and you're taking demand, which most of the time it is, that's your enemy. That 1 hour money zone, it's probably where the high probability rejection is. Now, I have a setup for that. It's called trend trading for me. And it's the trend play, right? It's take the shorts at the money zone, take that move down, take shorts up here, take that move down. All right, and same shit. Go 2 to 1. All right, so that's that. Okay, and that fails. We take the breakdown play right here. Okay, this is breaking down. We decide, oh yeah, this is breaking down. Let's take the breakdown trade. The trend is strong. It's kicking ass. This is definitely more than a 2 to 1, and we hit target. So no need to argue about that one. We bounce. These orange candles indicate that we can do a channel cross. That means that we would cross from the bottom of the Bollinger Band to the top of the Bollinger Band. And again, we have that green cloud condition. We had it here, but it just kept on dragging. But if we have it and we have a demand zone, I'm taking it. So this is just a fail. Here goes another opportunity to go long based on a totally different setup where the market is exhausted. We have an oversold situation with an orange channel cross possibility. So I wouldn't take that because that's not what I'm describing right now. It's just another setup. However, you basically can catch the bottom of that move. However, we're going to try to get in to this trade somewhere here, risking that swing low, which means our topside trade is a lot bigger because that candle that exploded told us that this thing can go 1R, 2R, right? At least right there. Now, what do you do when you're in a trade and you tap supply? You take some profit. You take some profit. And if you're already in a long NQ trade, you can't really take the shorts unless you sell everything, right? So maybe in an MNQ, you can take the shorts just in case, but I wouldn't recommend that because if you're in an MNQ long or you're going to take an NQ short and get clapped like this, it's going to wipe out, right? So anyways, let me not complicate things. We're talking about supply and demand here. You're in a trade to the upside because this was the triggered move. You knew you wanted to long this level since like yesterday, and the market just showed you that aggression. And we're going to see this again. Market then rallies, breaks through, creates supply, shows you there's weakness there, bounces off of the money zone, shoots break through that. You can add to your position either here or here. Let's add right here because the market shows strength there. For shits and giggles, I'll keep the same risk reward. By the way, that risk reward before was somewhere around 106 points. Whew, that's a tough one. 376 points. And you're in this trade for 17 hours. Me gusta. This is 56 points to make 370 something points. You're in this trade for 1 day. 1 day. This one might have been a little longer. Yeah, it's 1 day and 17 hours. So this one is 1 day. All right, so we move away from that supply turn demand. And boom, we hit another level. We clearly see, let's take the shorts for shits and giggles. All right, you get in somewhere right here. Oh, fuck, immediately you have drawdown. This should be a real stop right here somewhere. Really, the trend kind of got straight here somewhere. So this would have been your entry. That previous candle would have been your stop. You're basically going to get stopped out if you even got the very bottom. 50 points, 50 points. All right, so far we're making some crazy moves, right? We're making some really big dough, et cetera, blah, blah, blah. Now you start thinking, oh, well, this is supply turn demand, right? Let's get a little bird's eye view in here. This is supply turn demand. We came down into demand close enough. We can take this level here. Well, let's just say you've even seen this level here, right? So everything here is a kill because you know it's getting close to it and you're risking this demand. Well, that means that we're going to try to take this market 2R from that. Let's not get crazy, but let's get crazy. So that's not even your 1R. Let's just say this is your 1R, all right? And 1R, 2R is right there somewhere. All right, I would say that's a 2R trade. Hopefully you get in there. Now this trade is a setup for this demand line here at 14,352, or this new demand that came in. So I drew it that wide. We clearly hit target, risking a total of 37 points to 109. All right, market ended up going a little bit higher than that. No need to get crazy. Market then rejects the hell out of that level, comes back into your demand zone. You could have taken any of these wicks, probably not hit target, but let's just say we, whatever. This here is really, really messy. It's not easy to trade. It's not easy to trade, but let's see how I would have approached it. I'm putting an order at this level, risking that, I'm done. If I could, I don't know how this candle opened here, wicked me out, and then shot up. It's a done trade. All right, let's just keep it moving. You lost. So an L here. Okay, that's an L. An L is an L. An L is an L. Okay, market gives me another opportunity to go long. This market's about to break out again, guys. This shit is crazy. So let's just say after the second established trade, market moves up. I get in somewhere around here. Here goes another L. Okay, no problem. Market's breaking down. Let me try to take the shorts from this level. This is your breakdown candle. I'm gonna go try to get in somewhere right there, risking the previous swing high. By the way, you see this red, light red, that's your overbought signal right there. And then there goes the orange channel cross candle. So that's a whole nother play that I'm not even gonna get into. Where's that? So this is the play right here for the shorts. Now, what's the risk reward? Risking 25, we just need to make 50. We clearly clear that, all right? Clearly clear that and more. So somewhere down there, we pretty much hit target. All right, so that's a winner chicken dinner. We got a new demand down here. This is messy as fuck. Clearly you can decide, I'm not messing around with this. You could take the shorts, the longs. I'm not really gonna get into trying to ping pong my way through this one, but basically you can take whichever level you feel you need to there. Break out above both of these here. Let's just say you risk the whole fucking candle. Break out, I'm waiting for it to break out of this. White candle means that you don't really want to see green after that. I mean, you don't really want to see red after a white candle entry. So let's avoid that. You're gonna duplicate that. Put that up there. Oh, sorry. That's about 1R right there, right? So let's put that and double that up there. It's about your 2R trade right there. Okay. So that one takes some time. We have supply up there. Can't really get out of that. We end up hitting it in about 20 hours. After all of that, kind of craziness, but we were risking some pennies on this one. Risking 97, we made 253. Nice trade there. We would have taken this short, gotten stopped out, but we were in that trade. We ended up taking profit, big dump back down there. I mean, I don't know. What do you want to do? Take the shorts? Yeah, shorts is coming. Let's take the fucking shorts. So let's just say you took shorts risking this previous candle up here somewhere. That would have been about a 72-point loss. Big one. You decide not to take it, but if you're going 72 points for the L, you will get stopped out. You probably should be going all the way down there. This is the L. Oh shit, we're going long. Let me go long. This is fucking demand now. So there goes your risk. And this is it, bros. This is it, guys. This is all we're doing. Just taking these levels and making it simple. And you can see they're not all over the chart, but they're at definite key levels. So like you would have probably drawn something down here, and when the market came down there, you would have taken it up. So that one is really risking 64, so we're talking 128. 167 is the high, so 128 is somewhere around right here somewhere, right? So this one definitely is target somewhere right there. All right, that one hits target, so that 70 points you lost there, you made it right back, just holding on and, you know, kind of making sure that you follow rules at the bottom of the Bollinger Band, that demand, or this moving average. Meaning the money zone, okay, for the bounce in a bullish trend, which they flipped. So now you're scared, but then the roll comes, and then boom, you get all the way up there. Another overbought signal with an orange channel is going to cross. That's your channel cross play there. Market bounces off of that. We're going to take another play. Where? To the top side. Why? Because we're not biased. Risking that. It's about your 2R right here somewhere, right? 1, 2. Now you might make this. This might be a trade, brother. Risking 52, so that's 104. 123 is the high of that wicks. 104 is right there. All right, that's a win. That's a win. 104 risking 50. That's a win. Unbelievable. Unbelievable. Market comes back down. You could probably take this one, bottom of the Bollinger Band, close to that, but let's not even play ourselves. But that's about the same setup as this one right here, and I think you'll hit target. We break through with violence. This was yesterday. Yesterday's being the June 7th trading day. Market breaks that level, so we're treating that now as our level of our kill box, and we want to take that down for as many points as we can that we were going to risk. And I'm not going to like reduce this, but basically we do hit target. And if we had to measure it, we're talking about remember, this is the supply line. It should not break that back, and this retest fail could be a reason to enter. That's 51 points, so we want to go at least 102. We're doing 148 to 200 points all the way down to the bottom if you could hold to all of that. And the reason to leave would be that demand zone sometimes. In this case, they broke through it, but you didn't know that unless you waited all that time. But that was a good target to hit, 2-to-1 hit. A lot of these trades, they're working, we're killing it, right? Last but not least, we tried to take this long, right? And you get stopped out because that bad boy said, bears are in control and I'm not letting go. Now that's probably not 2R, but you're not hitting 2R. We didn't even, I think this actually hit the money zone. Not even on the 1 hour. This thing comes back, gets close to the money zone, not really, and then just rejects, right? So these wedges are telling you to short that level right there, but they also come in here because the market is in a bearish trend. So you can't just listen to 1 hour wedges, but up here it kind of worked, right? It just takes time. But the green ones go long, red wedges go short. A whole nother signification, but this means we are pushing into push phase, and now we have an overbought level up there. Who knows what the market might do? But at some point this morning when the market opened, we had this price action that we could have gone tried to play, right? Breakout from here to here would be your risk. So I would say this is about 1 hour. That's about 2R. And I'm eyeballing it because I'm pretty much good at this now. It's about 64, so we're going for 1 and change, 120 something. We make it to 177, 177 points from entry, not having to give a damn about all this pullback. I mean, they basically, after entry, they gave you 28 points, put you down 36 points, slingshot back up, you're up 40 something points. Now you're probably, up 4 points. All of that is noise, and these are hours, guys. These are hours that the market is doing these things to you. Well, that the market is working to go to another area of concern. It's like these things are magnets, and there's certain things that come up in the way, along the way, but, right? Holy crap, there's a zone up here somewhere. Let me take that. This one fails, clearly. Depends. I actually took this trade today, and I got out at that money zone, so not necessarily trading it the way that this 1 hour play would be, which would be like, let's just see, that's 1 hour, about 2 hour down there somewhere. So it's not necessarily the way that I'm not taking this 1 hour zone without other kind of factors, but you'll see that in a second. Okay, guys, it's about 45 minutes in, and we are now probably going to take another trade here, right? I'll let you guys know how this trade turns out in another video, but basically less of a risk. Started moving away. We knew that line was an area of interest, and this little bad boy probably hit target already. So it's about 1 hour right here. Nope, we just hit 1 hour, and 2 hour would be somewhere like around right there. All right, and that's because of the type of risk that we're taking and how the bounce kind of came in here. So it's just, and again, we're at the money zone. We know where the enemy lies, but if we hit the bottom of this Bollinger Band, that's money, okay? Just for shits and giggles, the risk on this rejection is about 27 to make, we gotta make about 50, yeah, about 54 maybe, right? Like 54, so somewhere down here. Is that where it's at? Yep, look at that, pretty close, 56. Go with this shit. Anyways, guys, will the trade work out? Let's go in the history, and we can't say that one, so let's just look at it. We took this trade, we know why. We know why every trade was taken. After 40 minutes of doing this, you guys know why every trade was taken. So let's just tally this up. Let's see. So we basically have one winners, losers, right? So one winner. This trade here is your losing trade, trying to anticipate the bounce from here to go back up. It's a loser, stops you out, so that's one for the losing team. Another bounce trade here, kind of comes up, doesn't stop you out, goes up again. You took another trade there, so that's two winning trades. So two more winning trades there. Here goes another trade to the upside. That's another winning trade. We took this short trade. That's a losing trade. We took this long trade. That's a winning trade. We took this short trade. That's a losing trade. So took that long trade, big banger. That's a winning trade. We took that short trade. That's a banger. That's a winning trade. We took this long trade. We took that long trade. We took that long trade. Wait, sorry. Oh, this is a loser. Sorry, this is a loser. I didn't really pretty much do the right risk reward, but basically we took that and got stopped out. You know, we took it up there somewhere and market came back, stopped us out, and we gave it a lot of room. So that's a losing trade. That's a winning trade right here. Market never stopped us out. Winning trade right there. Market never stopped us out. So that's two more winning trades. Here goes a short from that. That's a winning trade. Here goes another short. That's a winning trade. We didn't take this breakdown. That's fine. We took that long. That's a losing trade. Took that short. That's a winning trade. Took that long down there on a breakout here. That's a winning trade. Another winning trade here, which was a bounce. And let's see, over here, took a short, right? Kind of anticipating this rollover from supply. That's a losing trade. This one is a long. That's a winning trade. Here goes another long that, right? We took that long bounce, that loss. That's a losing trade. We took this long here. That's a losing trade. We took this short for the breakdown. That's a winning trade. We took the, we didn't take shit here, but we could have. We could have been losing like crazy or winning like crazy. So shorting this line here with some sort of decent stop when we came down there, that probably would be a win. Assuming this breakout, that's a loss. Rejection, that's probably a win because you don't really have any room, right? It's probably a win. So it's messy. Let's just keep it moving. This one here is a winning trade. What a banger. This one here is a losing trade. So that's a winner and then a loser. This is a winning trade over time. Here's a winning trade over time. Here's a winning trade, breakdown trade. Here's a loser. Here's a winner. And here's a, all right, so we'll call this a loser. And here's a maybe. So we won't even count that. All right, so in total, we took 5, 10, 15, 20, 25, 30, 31, 32 trades. We took 32 trades and we won 5, 10, 15, 20, 21. Basically, we took a total of 32 trades. We won 21 and lost 11. It's like 50%, right? 11, 11, 21. About 50% win ratio just doing this here. However, the bangers that are 2 to 1 are wiping out the losers. And that is the theory of probability with this supply and demand trading that I'm trying to basically do out here. It has to be beyond our emotions. It has to be a set and forget, because if that happened over the course of since June 11th, right? So since June 11th, we've been taking trades. And right now it's, July, June, January, March, April, May 11th, we've been taking trades. And now it's June 8th. This is almost 50% win rate in 1 month, just taking this one setup and nothing else. You don't have to worry about how long you're going to be in a trade. It's going to either hit or you're going to fail. A lot of them will fail, but the winners are going to exponentially wipe out the losers, as you can see. As long as you have an exit up there for the majority, if not most of your position, and don't take another pullback. So, I wanted to take the time to really show what that supply and demand strategy was. This is just the 1 hour. But today, to show you how I, kind of play them on NQ, let's just say this was your 1 hour trade here. All this pullback into this kill zone, this yellow candle on a 15-minute could be a trigger to go in right before they get out there, exponentially reducing the win-loss ratio here, or exponentially, kind of reducing the risk. On their 5-minute, you got your yellow candle signals after a massive pullback, but as soon as they get into this zone, it's fair game. Do they break? Do they stop you out? No. And what you're doing is setting up a 1 hour kind of scenario for an entry, and it happened. It happened, and you're waiting for the pullback retest into that zone. So it's not like you have to FOMO into it or out of it. But even if you did FOMO into it, because at some point you knew you wanted to take anything that broke above that level. So at 4 something in the morning, you get your alert. You're like, oh shit, it's happening. 3-bar play. Not really. This is not a 3-bar play, but it basically is a nice big candle, medium candle, rest candle on a 5-minute, and then a breakout. You get in somewhere down here because you knew that line to enter was right here. You're gonna get paid. Pretty nice penny. You're gonna get paid from there to there. From here to there, you're gonna get paid 44 points. And you might want to take that and run and just reload again. Trust me, we've had these discussions. Why let this money come back, put you in the gulag, 16 points, 20 points, because this oscillation now is 62 points, and that one is only, 19 points. And then this next oscillation is 90 points. Then it was just off to the races, all the way up to 194 points, because the 1 hour told you that this could happen, and that was the risk that you kind of put on. So that was the play that you took based off of that 1 hour move, and it banked. It banked out. And maybe I'll just have like a 1 hour setup, right, like that, and everything that the chart kind of produces as we kind of push back into that level as we were just doing it. And this is hindsight, but even up here. So basically, I want to take shorts as the market got into this supply level somewhere around this kill level. Right? We're moving away. There's supply up here. There's supply up there. Market comes up, taps out, comes up again, taps out. It's like hesitating, fuck it, I'm in, boom, I'm in, boom, 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 boom. You get really, really close to that, and then they take it all back, stop you out up here. Do they stop me out? Ooh, they got really, really close. That play is still actually in effect. And who knows what happens, but it's in effect. So this is the more intricate part of, or the scenic part of what's going on throughout the day. And that makes you get really, really emotional. But I want to get away from the computer at all. Just put on a trade, let this win-loss of 50% kind of play out in this exercise that we just did. Now, this is me taking the best of my abilities. You guys saw exactly how I took them on a 15-minute. Now we have a lot more plays to take. Okay? And that starts to confuse the hell out of me sometimes, but I think just now I might have figured out how to play those levels. Like, I'm going long, I don't care what happened, I'm just looking for an entry. I'm going short, I don't care what happened, I'm just looking for an entry. Now, what you find is that a lot of the times, the 15-minute already gives you the evidence. I went back 20 days on the 15-minute to see how I would have played it, and this would have not necessarily been a real entry yet. But this down here was a clean entry on the 1 hour. The 1 hour was showing us that they had demand line, 15-minute demand line. You got to gun this. And then, it's just a matter of breaking through all of these things. Once the play is in effect, this was another good entry. Channel cross, a lot of evidence there. We took shorts right here. Not a bad short. It could have worked, but they held it down. It was a breakout long. That ends up working. I think we already determined that. Right, and look at the reasons for that breakout long, right? Money zone, everything looks good on the 15 minutes, so it makes no sense to leave. This is a good short, just does not work out the way that, we kind of hoped that it should have. They held it right there, blah, blah, blah. Here goes a good long, got a demand zone down there. So the 15-minute is an extra form of like, let's just say, reason to take the trade. Now, the 1 hour tells us to short this. Do we have evidence? No, a 15-minute came and stopped us. Is it going to work? I don't know. Another 15-minute demand line. But we're not taking the 15-minute demand. We're taking the supply from the 1 hour and kind of rocking out. Now, this here was, I think, the one where we got stopped out, and then it started going. So that stopped out. Then we took it again, and then it started actually working. So that worked out. We took shorts right here after we hit targets. This kind of, that worked out. This one here definitely worked out. And the reason why we captured this entire move was because of the 1 hour telling us that rejection was green light after they broke through the 1 hour demand, supply, sorry. And then this was another area kind of into like somewhere down here, and just, know that this area is a kill box. It's like, it should not go back up there. But if it does, you got to kind of deal with the bullshit. Here is the same scenario. This is your kill box throughout the entire 1 hour, and in 15 minutes, they just keep wicking down there. You get in somehow, you just don't get to the top. That fails. Here goes your 1 hour kill box. You got all this time to do it now. All this time to take that trade. And then it becomes like, do I FOMO into this? You don't need to. Here goes another kind of entry, which was a little bit more of a FOMO entry. And you're risking somewhere down there, but your 15 minutes showed you that we could have done it already. So who knows, maybe I didn't draw that wide enough. It was another 15-minute kind of play, and so on and so forth. this is just, a really, really crazy kind of, concept that I've been playing with. What's really messing me up, but what seemed to really, really be cool was we didn't use any lines to determine when we were going to get in. We didn't use any of that. We just got in based off of that. Sorry, we didn't use any moving averages to determine whether or not we were going to get in. All we did was say the 1 hour is doing X at this level. We're going to go ahead with the probability of a bounce or rejection. That's it. And some failed, some passed. But on a smaller time frame, we can cloud our judgments with why we shouldn't take a trade. And I think that's where I've been struggling with. Not only that, but like I have a trend trade playbook, and sometimes I'm like, yo, am I gonna take the trend trade? And maybe if I say, I'm gonna wait for the 1 hour to kick into a trend on the 5 minute down here, I might get whipped around. So this is, let's just say, this is the first one. So yeah, this is the first one. I get into this trend trade. Oh shit, the trend is starting. Let me get in there, and it fails, right? And I'm trying to go for a big ass move here. So here we go again. Oh shit, the trend's starting. Let me get in now, and it comes down, and I'm like, oh, is it gonna fail? You get out, and then you just basically lost money or just exited for no reason, and then the trend starts to run. So you can't really think about the 5 minute kind of price action. And you got to really just trust the fact that the 1 hour is going to do what it's going to do. If you statistically see it, we've done the back test, literally every single trade, guys. And I hope you found value in how to trade supply and demand with me, right? And I think I found some really good insight just doing that exercise. I'm going to only take the 1 hour supply and demand and see how we can just kind of take the trade as it comes back into that level. Not fearing whether or not it's going to break that level, but if structure says, all right, I've hit a point where I'm going to bounce, I'm taking those levels, I'm taking those entries. And I think we'll find that we'll get a lot of really cool entries. So once again, this is Spark from Sparky Trade. I hope you guys had a really good understanding of how we trade this price action in this wild, crazy, volatile market. I'll do another video on what my trend trade playbook is. Hope you guys have a great night. Peace.